Okay, my favorite people. So today we want to talk about 4 big ideas, right? Number 1 is we want to talk about why I still believe this is a very bearish signal. Number 2, we want to talk a little bit about what effect Apple, Amazon, Facebook, et al. Had on the markets. Number 3, we want to talk about a very important Fibonacci time extension, which will occur on the 10th of February. What does that mean for you and how do we prepare? And then lastly, I just want to talk about my trading ideas and trading plans for today, so you guys know what I'm looking to do in and around this area. So without further ado, let's get at it. Okay guys, look, first let's talk about some ideas in terms of making a case for the bulls and making a case for the bears. Let's start with a case for the bulls. Okay, so this is the whole structure from the top. We topped at around 69k, something like that. So we're going to just do our standard LA5 wave, which you will agree looks pretty much like this. That would be 3, that would be 4, and then we finish with 5. If this is the case for the bulls, what we want to see is a ABC correction. You're looking for 5 waves between 0 and A, and then, you know, B wave is a B correction, and then another 5 waves in and around that correction. Now for me, look, I cannot subscribe to the idea that this is a 5-wave structure, specifically from this move here. Doesn't show any kind of move to the upside in any kind of 5 waves. And even if we try to map that out, we move up here and then we go down there, then we kind of do this and then there. I mean, does that look like a typical 5-wave pattern? I mean, if you look at that, you can argue that that's more of a zigzag wave pattern to the upside. So let's apply our bearish Elliott wave case again. 1, 2, 3. Now I believe 4 is going to be somewhere around here, right? With 5 again being our final leg to the downside. Now the reason I think this has more potential, because structurally, if we apply our same ABC correction pattern here, but this time we take the 3 up here to A, down there to B, and then finishing here for C, that has a better structure to it. Okay, you know, this is more of a flat ABC correction in that sense, rather than what we've seen before. So let's look at the 5-wave structures, right? So again, we're looking at 5 waves somewhere around here. So 1, 2, 3, 4, 5. Do we have an ABC correction in between A and B? So again, you're not taking, these are outliers. It's not to suggest that it's not an ABC correction, because I'm taking the top, I'm taking the bottom, I'm taking the top, okay, and then the bottom again. So do we have a zigzag pattern there? We do. That's a zigzag correction. And then it's a case of then saying, okay, do we have 5 waves between B and C? This becomes a little bit more challenging. So we need 5 waves. So you could argue, right, that you've got wave 1 from here, so 1, 2, 3, 4, 5, and you've got an ABC correction, A, B, C, then you've got your 1, 2, you could argue that that could be 3 at the top. Now we need a 4th, and then we finish at the 5th. In general, you want to suggest that 3 wave is not the shortest wave, so we'd expect that if we do have a pullback for wave 4, that number 5, on the principle of the fact that 3 cannot be the shortest wave, would be relatively low. So structurally, that makes much more sense to me as I look at the chart than making the case that this was the 5th and final wave to the downside, and therefore the bottom is in. I've changed my stance a lot. I'm probably in the position where I no longer want to think strategically that everything is going to be bearish, because I missed out probably on a lot of good moves, if I'm completely honest, because my pig-headed nature couldn't say that it was, you know, that the bottom was in. Yeah, it still might not be in. We still could be heading down. That's what we're going to look at next. If you are looking for a central exchange to use, maybe you've getting a bit fed up with your own, or you want to find a new one, maybe consider using ByBit. It's the platform that I use myself, and it's one that I'm pretty much familiar with. If you sign up with me, link is in the description, you will receive $50 as a welcome bonus, which is always nice. Why would you use ByBit? Well, number one, obviously in a world where exchanges seem to be falling down by the bit. One of the things I liked is they quite quickly jumped on the ability to prove their reserves, which is essentially a way in which they look at what's backing everything within their portfolio. So if you look at their portfolio, this is the Nansen dashboard. You can see majority of their tokens. So essentially you've got like 50% in USDT. We've got just over 20% in BTC. Got a small percentage of 10% of their own native token, which is ByBit, which is a utility token, and then we have around 10% in ETH. Nearly 80% backed by really solid tokens, and an additional 4% in USDT. So I think if you're looking for a platform that's well backed, then you should consider ByBit as a way to kind of get that through. Now the other thing I like, I mean, in terms of platform functionality, it links nicely to TradingView, so it has all of the ability to map out, use the same kinds of indicators that you see on TradingView. You can set alerts, which allow, if an alert comes through, to be registered on ByBit. It also allows hedge mode, so it means you can do a short and a long position at the same time. Why would you want to do that? Well, maybe if you're at a position where you want to lock in a specific value, maybe it's in a loss position and you want to be able to work that off. Hedge mode allows you to kind of, you know, counteract that by locking in that loss for a temporary amount of time until you find a new level that you want to reverse and turn. Of course, none of this is financial advice, but we do talk a little bit about how to manage trades in the server. So I would recommend ByBit. Again, it's one that majority of us use, and I like to see the confidence in a platform that comes out and explains exactly what they're going to do and demonstrates that transparency on their native token. So as I say, if you want to use my link, it's in the description. Helps you out, helps the channel out, and helps me out too, so really appreciate it. Okay, another point I want to bring you to your attention. So now we're going to come a little bit closer to home, okay? Now we want to see what this parallel channel looks like. You can clearly tell, if we go on maybe to the 2-hour time frame, we've been respecting this channel. We've got a couple of hits to the downside here. Yeah, so that kind of gives us a good signification that that's the bottom of the channel. Yes, we see breakouts, but that's just standard stuff. And then we've got, you know, some nice touch points to the top side as well. So this is a nice channel to work to in that sense. And you can see we're kind of starting to hit to this heart line, you know, but why do I think we may start to see the breakdown? We're going to cover that one next. The other thing I just want to cover just very quickly before we jump in is the minor parallel channel which I've created here. As we zoomed in, again, another thing we've respected quite well. You can see nice move to the top, comes back down, another move to the top, comes back down, hits the heart line, and then we can see that we've had 2 touch points here. Now the key question is, what exactly about that specific area? And why did we stop there? So if you remember, we hit our key level, or just shy of the key level, but also for more confluence into this, if we take our, let's go with the Fibonacci time extension, sorry, the Fibonacci extension tool, we go from our local low to the swing high, back down to the swing low, and you can see to the absolute dollar accuracy we were in that 2.618, so the golden pocket of the Fibonacci time extension. So I just think, you know, in terms of confluence and multiple touch points, this was a really strong zone, and one in which we might find that we pretty much probably won't get past this at that point. A really interesting point, you can see right now, if we bring in our weekly levels, we pretty much got that about $10 short of the weekly level. So again, really key and strong rejection at that level, and ultimately why now might be an interesting time to think about shorts. Yeah, because we got a strong rejection, strong wick to the downside, comes back in. Even this push to the upside again came with, if you look at the volume, that was nice volume to bring us to the upside. Got a rejection, comes back down, more volume here area, and that might be the start of, let's say, our 4th wave starting to play in, simply because we got a very strong rejection. So again, just removing my my weekly level. I'm going to leave my channel on, but like I say, right now all I'm looking to do is trade between these channels until such time that it's not worth it. Again, okay, we had high volume, but where did that candle close? Right down here. If we go down to the 1 hour, you can see obviously we did come back on, but look at the rejection. The rejection was significant right in there, and boom, just got absolutely throttled. So, and interestingly enough, that volume there is nowhere near the volume here. So it didn't take a lot for the bears to push that down. What does that signify? Liquidity grab. Yeah, all of the stop losses above this previous channel got absolutely wrecked, liquidated, and then that's essentially what you were anticipated to see. So whether we get another kind of liquidity grab up here, I'd probably suggest the answer is no. Why is that the case? Well, look, earnings came in. What we knew is that earnings were not too great. So this was the information that we gathered. Let me just make that a little bit bigger actually, so we can see. So I've done a little bit of research. Let's make this 20. Okay, and the 18 of big tech. So we had Apple, Amazon, Alphabet, all delivered disappointing results on Thursday. This was just after the close, within like an hour and a half. But obviously, previous to that, Meta had a good, kind of a good day, which is why we've seen this nice spike. But then the bigger companies, your Apple, I say bigger companies, relatively speaking, I guess, Apple, Amazon, Google, all delivered really bad against what they anticipated. So what does that mean for the Nasdaq? What does that mean for the S&P? I mean, you can see well, the open is still some way off yet before we hit the open, so we're not going to really get to see the effects of that. But it's not, I think man would say it's not going to be, when your big tech sector starts to drop earnings, that's normally resulting in a bit of pain for the industry, because you'll see layoffs. Obviously, you know, stakeholders are going to want to get money, and the only way you can offset that is obviously by starting to reduce your cost. So yeah, that's not a great result, however you want to dice it up. So for me personally, I think based on what we discussed earlier, this would be for me the top of that third wave, and now we can start to move to the downside to capture our fourth wave. So, you know, I'm not saying you could just dive in here right now in terms of a market order, but I would anticipate sell position somewhere around here with your stop just being above, you know, just that area, and letting this ride down. I mean, we've got plenty of, for me personally, plenty of room to go down. Even if we hit the bottom of this channel with a relatively safe stop loss, you could even just, you know, if you think about it logically, this previous wick did not come to this wick, so you could maybe even just keep your stop loss just above here, and you're still going to get a nice 1.43 risk to reward ratio if we hit this bottom channel. But I think personally I think we've got further to grow down here. It just depends on how long you want to hold on to that short. Would I be anticipating a long? Not at the bottom of this channel. I think for me, with the news of the tech giants starting to come in with worse than anticipated earnings, my place of long would be somewhere in this area. Right, let's look at our Fibonacci retracement. So Fibonacci retracement tool. So again, looking at these key levels, we'll take the bottom to the top. Actually, we need to extend this slightly just to cover the top of this zone here. So where does that put us? So we've put the 0.5. Well, actually, if we start, we've got the 382 right at that 21,200 to the actual dollar accuracy. 21,200 would be a really interesting zone. If we break this zone, and again now, because the 236 is right at the bottom of the channel, so we are actually going to find some stiffness against this bottom of this channel here. Number one, because it's now a key level in terms of the Fibonacci retracement, but also because just below here you're going to find liquidity zones, right? So I take my liquidity and I put it here. Okay, that'll do us. So again, we haven't came and tapped this liquidity for some time, so you're going to have a lot of liquidity here. Again, right underneath here, you're going to have a lot of stop losses from people who were longing, so we could get a lot of long wrecked people. But then move to the downside again, which we've said, which is this 21,200 right in this zone of confluence. Interestingly enough, and I've made this case, as you know, you can kind of see what we've got here is a bit of a bar pattern in that sense. If we move to the downside and we start to congregate around here and do a little bit of this, when that's a dangerously looking head and shoulders pattern. Of course, market makers would like to see a lot of people trapped into believing that concept, so always be mindful that bigger time frames, it's not as efficient in my humble opinion. But anyway, there you go. Okay, so big idea number 3. You've if you've been following me, you'll know for some time that I've been actively engaged in identifying this significant Fibonacci extension time. So what is the Fibonacci extension time? So we map it out from swing low to swing high, back down to swing low, and this becomes the start. Now the start of this was the FTX drama. Okay, so this is where the FTX fallout came in, mapped it out on the low, and then obviously you take the Fibonacci, so it takes the 618, the 1, the 1.618, the 2, the 2.618, 3, so on and so forth, as key time sensitive significant points in the chart on a time perspective. Yeah, so looking at this, we've got 618 occurred on the 14th of December, and if you zoom in, you can see clearly on that date we had, I think it was about a 2,000 basis point move to the downside. Now the way in which you can kind of look at that, you can say, okay, well, how do I determine if the move is going to go down or up? Well, it's normally the inverse of where we've seen in the past, so we can see quite clearly that we've been in an uptrend from this point forward. Okay, we come to this point here right at the Fibonacci time, and then boom, snaps back down. So let's just qualify that in terms of what that looks like from a price perspective. Okay, so this was the high and this was the low, 2169, so 2,169 basis point move to the downside. We come along to the 1-to-1 Fibonacci time extension ratio, which again you can say was here. The key thing here is, if you look, let's say this was, you know, an extraordinary move to the upside, and if you maybe just suggest that this was your 3 wave, and there's ways in which you can figure out how far you want to go, but that is just, you know, if you catch that move to the upside, well, it's yeah, that's a 45%, 46% move to the upside. Why is this key? Well, right now we're coming into this 10th of February, 1.1618. Taking that into account, you know, we have seen a rather large move to the upside in the continuation of that, based on the logic of price goes up, Fibonacci extension, move to the downside. Price goes up, Fibonacci extension, move to the downside. Price goes up, Fibonacci extension. I'm not saying this is exactly what's going to happen. It may not even be smack bang on the 10th of February. I'm just plotting on the chart the Fibonacci extension times when I think key activity will happen. So all I would suggest is, look, the way I'm going to approach this is I'm going to have relatively low leverage, but anticipating building my shorts now as the price is going on. So DCAing into positions for shorts, simply because on or around the 10th of February, I'm expecting to see moves to the downside. Add to the fact, you know, we've got a 4th wave, which we're saying, suggesting that this will, somewhere around here will be our 4th wave, and then another move to the downside for our 5th wave, as we kind of shown that. So taking my pivot points, you guys know I like a good pivot point, but you can see, let's take the last 2 weeks worth of data. Okay, so the last 2 weeks worth of data, we come in here, this is the pivot. Okay, so pivots, they like to test the S and the R, so the support and resistance. You can see the resistance a bit off, but it hit pretty much the dollar accuracy, maybe $10 shy, something like that. But because it didn't hit it, comes back down, and then before the end of the week, bang, came in and took R1 out of the equation. So where are we for this week? Well, so far, yeah, we came, smashed through the pivot point, bounced off S1, comes back up, hits the pivot point, comes back down, hits R1 again, then breakthrough. We haven't quite hit R1 yet, but now we've come down, tested S1, sorry, our pivot point. What am I talking about? So I'm anticipating another move and testing of S1. If we break S1, move down to S2, maybe. Now look, interestingly enough, we've got a couple of key areas. What did we say? 21,200 was that area. That's in and around S3. Now the reason this is so tight in comparison to this is because we were relatively tight across this whole move. This is effectively our range, which we've been ranging in. So that's why this is much of a smaller move, and why we'd anticipate at least maybe hitting R2 or S2 for a potential move to the downside, or R2 and R3 for a potential move to the upside. Now the potential move to the upside, which is R2, again falls nicely at that 24,904. Okay, my friends, well, that's all I've got for you on this one. If you've not joined our Discord server yet, link will be in the description. Also, if you have if you're looking for a platform to trade on, I suggest you use ByBit. Link again is in the description if you want to get $50. But without further ado, have a lovely weekend, and I will see you guys in the next one.